Hello there, welcome to our special workshop. Today we're diving into the world of trading. Trading is buying and selling things to make a profit. Exciting, but tricky. The most important thing to learn? Trading psychology. It's all about understanding your feelings while trading. Emotions can help or hurt your decisions. Imagine a little Clay person, Clay, who wants to be a great trader. He faces moving charts and numbers, feeling happy, scared, or excited. Trading psychology is how Clay handles these feelings. If your emotions are shaky, your trading decisions will be too. Learning to control your emotions is like keeping a steady hand in claymation. It helps you make smart, clear choices and stick to your trading plan. We'll explore how emotions can trip you up and share tips to stay in control. The goal isn't to erase feelings, but to understand them and not let them take over. Are you ready? Let's get our hands messy and learn to be calm, confident traders. This journey is for every trader, big or small. Your mind is your most important tool. Let's start shaping it for trading success. It's going to be a grand day out for our minds. In our workshop, we have a few Clay characters learning to trade. Meet Fearful Fred. He worries a lot and often sells too early, missing out on good trades. Fred shows us how fear can freeze us. Next is Greedy Gus. He's overconfident, holds on to winning trades too long, and often loses his profits. Gus teaches us that wanting too much can backfire. Then there's Hopeful Holly. She's optimistic, but hopes losing trades will turn around instead of cutting losses. Holly's story shows that hope isn't a strategy. These three, Fred, Gus, and Holly, live inside all of us. Sometimes we're scared like Fred, greedy like Gus, or hopeful like Holly. The key is to recognize these emotions when they appear. Understand what they're telling you, but don't let them control your trading. You are the director of your trading story. Emotions are part of the process, not the boss. Good trading means managing these inner characters. Spot them, learn from them, but keep your hands on the controls. That's how you become a better trader. Let's see how these emotions play out in real trading situations. Ready to meet them in action? Let's look closer at Fearful Fred. Fear is powerful. It's meant to protect us, but in trading it can sabotage us. When a trade goes against you, your brain reacts as if there's real danger. Fred's fear leads to two big mistakes: FOMO and panic selling. FOMO. Fred jumps into trades late, afraid of missing out, and often loses. Panic selling. Fred abandons good plans at the first sign of loss, missing profits. Sometimes fear freezes Fred completely. He overthinks and never takes action. This is called analysis paralysis. Fear can make you miss opportunities or act rashly. To master trading, you need to calm your inner Fred. Remind yourself you have a plan and stick to it. Accept that losses are part of the game. Don't let fear dictate your moves. Take a breath, review your plan, and act with intention. The best traders learn to trade through fear, not avoid it. Recognize fear, but don't let it control you. Trading is about making decisions, not reacting to panic. Stay steady, trust your process. That's how you keep your trading on track. Let's see what happens when greed takes over. Now let's talk about Greedy Gus. Greed is just as dangerous as fear. When you're winning, Gus wants more. He convinces you to break your rules. Instead of taking profits at your target, you hold on, hoping for more. Often the market turns and your profits vanish. Greed also leads to overtrading, seeing opportunities everywhere and making reckless trades. This usually ends in losses that wipe out your gains. Gus might also risk too much on one trade, thinking he can't lose. That's like putting all your clay into one model. If it breaks, you're left with nothing. Sensible traders risk only a small part of their account on any trade. Greed makes you forget about risk and focus only on reward. This is how many traders lose quickly. The lesson? Stick to your plan and take profits as planned. Don't let Gus talk you into chasing more. Greed clouds your judgment and leads to mistakes. Stay disciplined, follow your rules, and protect your capital. That's how you keep your trading healthy. Now let's see what happens when hope takes over. Let's spend time with Hopeful Holly. Hope is wonderful in life, but dangerous in trading. Holly's problem? She can't accept when she's wrong. When a trade loses, she hopes it will turn around instead of cutting her loss. This turns small losses into big ones. She ignores her stop loss, thinking waiting will fix things. But hope isn't a strategy. The market doesn't care about your wishes. Hope can also lead to averaging down, adding more money to a losing trade. This is risky, and often makes losses worse. Hope clouds your judgment, making you see what you want, not what's real. You start searching for any sign to confirm your hope, ignoring warning signs. To be a good trader, you must be a realist. Accept that losses happen and cut them quickly. Cutting a loss isn't failure, it's discipline. The best traders know when to let go. Don't let hope keep you stuck in bad trades. Follow your plan, use your stop loss, and move on. That's how you protect your account. Let's look at the most common mistakes traders make. Ready? We've seen how fear, greed, and hope can lead traders astray. Now let's look at common mistakes. First, revenge trading. After a loss, traders jump back in to win it back, making reckless trades. This almost always leads to bigger losses. The market doesn't care about your feelings. Next, not using a stop loss. This safety net protects you from big losses. Many skip it, thinking they'll exit manually, but emotions take over. A stop loss is unemotional, it protects your capital. Another mistake, not keeping a trading journal. A journal tracks every trade, your reasons, and your feelings. Reviewing it helps you spot patterns and emotional habits. Without it, you repeat the same mistakes. Good traders learn from their history. Avoid these mistakes by planning, protecting, and reflecting. Trading is about learning and improving. Don't let emotions or bad habits run the show. Take control with discipline and self-awareness. Now let's build a blueprint for calm trading. How do we help our clay friends? With a plan. A trading plan is your blueprint. It tells you what to do and when. Write it down. Don't just keep it in your head. Your plan should have clear entry rules. What needs to happen before you trade. This stops FOMO and impulsive trades. Next, set exit rules. When to take profits and when to cut losses. Use a stop loss to protect against big losses. Set a take profit to lock in gains and avoid greed. Include money management. Risk only a small part of your account per trade. For beginners, risk no more than 1 to 2% per trade. This keeps you in the game, even after losses. A good plan removes emotion from decisions. Your only job is to follow it. Plans keep you disciplined and focused. They protect you from your emotional clay characters. Build your plan, trust it, and stick to it. That's the foundation of calm, successful trading. A trading plan is your main weapon, but there are other tricks to stay calm. Take regular breaks. Don't stare at screens for hours. Fatigue leads to emotional mistakes. Reduce your trade size if you're feeling stressed. Trade with an amount you're comfortable losing. This lowers stress and helps you focus on your plan. Practice mindfulness or deep breathing when emotions rise. Pause, breathe deeply, and reset before making decisions. This breaks the emotional spiral and gives you control. Remember, trading is a marathon, not a sprint. Don't expect to get rich overnight. There will be wins and losses, accept both. The goal is to make more than you lose over time. Don't get too high after a win or too low after a loss. Keep your emotions steady and focus on execution. Consistency is key. Build good habits, stay patient, and keep learning. That's how you become a cool, confident trader. Let's wrap up with your path to mastery. We've journeyed through the world of trading psychology. We met fearful Fred, greedy Gus, and hopeful Holly, and learned their lessons. The most important takeaway? You're in charge. It's not about having no feelings, but managing them with tools and plans. Everyone faces these emotions. Your job is to understand and control them. Keep a trading journal to spot your unique patterns. Be honest and curious about your mistakes. They're opportunities to learn. Don't beat yourself up. Reshape your approach. Every trader faces these challenges. The successful ones take psychology seriously and practice discipline daily. Think of yourself as an apprentice, always learning. Your mind is your most important tool. Take care of it. Build your plan, follow your rules, and learn from every trade. Step by step, you'll become a calm, confident, and consistent trader. Now go mold your success. The adventure is just beginning. Happy trading.